you see, literally we have a breakout from the current ascending trend line and push price to 2662, 2663 retracement. And the reason you have 2663 retrace, we have looked at it from other strategies. You can see here the supply with demand floor, break of the demand floor, and retest, retest, retest. And we have here demand floor, break of the demand floor, break of the supply with respect. So we have from the floor, we have the demand floor, demand floor, break of the demand floor, respect, respect of the supply with break of the supply with price response on demand. But there is something to look at on this 1 hour structure. By price rejecting this level, look at what it has done. It sold up to this level for rejecting this level because this is a double top structure. This is a double top structure, a double top structure. So the last double top structure, this is the neckline. This is a retest to a broken neckline of a double top structure. So this is 1 hour double top structure. Let's right. So we're looking at a case scenario where look at what price has done, and on 1 hour, when that roof was broken yesterday, price came and retested it on 40. You can see what happened yesterday after the structure was broken. It got respected and price returned back to retest that 1 hour roof. You see, after price broke out from that structure, it broke out from a supply roof, came down and respected it. On technical, price could see return here to 41 zone to respect the structure again. The broken supply roof becomes a demand floor. But there is a catch to it. That price managed to make itself into an ascending structure. And this M structure is a bearish price action, whether you like it or not. This M structure is a bearish price action. And when price tested the neckline, this is the neckline. When it finally came to the neckline, look at what it has done. And we connect this neckline with the previous neckline to or the previous double top structure. And when it came to the neckline, it has dropped. And price has returned to a neckline again, indicating there is a possibility that correction might really be underway. So if that happens, then you see that price is coming down to this zone so that it will complete this push after touching into the double top neckline. So this is a case scenario. It's really a case scenario and a very big case scenario. And we present our evidence too. When we look into the daily chart, we have two charts in daily. One is respecting, one is disrespecting. So we also look at that one to see what um, what evidence this current swing presents. We look at it. So what we see here is technically the 1 hour structure is actually what we are playing on. And you can see when price started to the roof, came again, retested again, they have not broken the neckline. So for SAE to continue to trade higher, it has to break the neckline of this double top structure. This is the neckline broken, then the last neckline, price sticking or respecting it. So for where price is now, we could technically have a swing. But let us look at it again that we have a breaker from an ascending trend line. And that breaker from an ascending trend line, let me see. So let's look at it. The breaker from that ascending trend line was also respected. You can see breaker from an ascending trend line, respect and price sales. So it's something to watch. It's something to watch. Honestly, it's something to watch. I'm not gonna lie to you. It's something to watch. So it has to be watched. It has to be watched. It really has to be watched. And this is the current neckline. Two, three. You can see price has respected that structure. 1 hour structure. So sometimes you don't always have to look back too much. If you understand the concept of market structure, you can always use the most current price action to also predict price movement. And that's exactly what we've done. Instead of looking back too much, sometimes when you look back too much with broad chart, it can really be misleading. It can really be misleading based on experience. So sometimes you don't have to look back too much. If you look back too much, it can be really misleading. Mess up. That's because of experience. So let's work with the current price action. Let's deal with the current price action. We have here 1 hour. Let's see for that breakout. We have here first of all price the company has a demand and break of that demand structure. So let's place it on this place and use that as a solid foundation. So that's 1 hour support structure. It's most likely that the price breaks out from where it is now. If they break out from where it is now, then they will come here. And if they come here, there's a probability that they may continue to fail. There's a very high probability. So if they break out from this structure, it's not working. I don't want to see price break out from this structure. So if the price breaks out from this structure, it's not something we want to see, honestly. We don't want to see it because if that happens, then the new structure for buy, which means that the market is looking at a very serious correction. So if market is looking for a very serious correction, then it's trying to trace its origin where it started from. So let's look at it. This 1 hour structure. We're going to use it actively. Then if that happens, then it looks like the market wants to return to where it started from. The bullish rally started from here. You can see it Wednesday rally as price started from that place, started from 21. So it means I want to retest 21 and I retest it to 21 with the double confluence that the bullish channel, this bullish channel. So mid term 1 hour bullish channel. So you see the bullish channel started creating from here we have two weeks and then only one floor. So if price comes in, it wants to complete it for you to continue trading. That is what we see for let's say you. That's what we see for SE. So let's hope that price will swing up again. Let's hope that price will swing up again. If price swings up again, then most likely we'll be watching 67 as a retest. Yeah, 67, 67 will be a retest. Now, actually, it has already broken out from the ascending trend line. So price might get to 67 and ultimately drop finally. This is based on 1 hour chart. So you see there's a breakout from an ascending trend line. You can see 1 hour trend line and successfully retested and it ends up in sell from 63 to 50 to 52 to 51. I said it in my previous post where we look for correction in housing. So if this swing happens really based on this a strong demand flow, we have here as a very strong demand flow, a W structure showing a bullish price action. We have another W structure. Then we'll have a breakout structure, we'll have a retest, and we'll have a break of the supply and price returning here. So we might get a W structure and see price will come back, we test the broken ascending trend line. If that happens, that might push price into 6668. They begin to run. So this is also very likely that you can see price push into this level, then ultimately they come back again. So this is what we see for now.